Hello, guys. Welcome to the second part of our video series where we will continue our discussion on Wix. So, today we are going to start our discussion by looking at the geographic breakdown of revenue, and then we will have a look at the institutional ownership of Wix stock. We will then continue our discussion by looking at the Q3 financial results that Wix announced. The Wix margins and profitability has received a bit of scrutiny in the market, so we will round off our discussion today by having a look at a couple of ways in which Wix can improve its margins and free cash flow. I hope you enjoy. Guys, a lot of work goes behind the scenes in making these videos, and your help can go a long way. May I ask that you hit the like and subscribe button so that you continue to benefit from our top quality research? A quick look at the disclaimer section. The company earns most of its revenue in North America, with North America representing 58% of total revenue. The next biggest market for Wix is Europe, where it gets 25% of total revenue, followed by Asia with 13% and Latin America with 4% of total revenue. Institutional investors own 90% of Wix shares. This is a significant percentage. Some of the biggest mutual funds that hold Wix include Flossbach, Principal Investors, and Fidelity Advisors. As far as the top 10 owners of Wix are concerned, we see Flossbach, Fidelity, and Baillie Gifford as the top three, followed by Principal Global Investors and BlackRock. Wix has a fast-growing business with an annual revenue growth of 26%, and annual collections are growing at a rate of 33%. Future growth prospects are bright since the web development space is still growing with a lot of market share up for grabs. And there should be more demand from future generations who are web savvy. Geographical expansion to more developing countries is also likely as more societies rely on the internet for their daily lives. Moreover, annualized recurring revenue, or ARR for short, has increased by 18% year over year, and it's at 992 million. This impressive development in ARR represents a sustained growth of new subscriptions and higher priced subscription packages. The company has also been able to monetize on its older cohorts through a strategy of innovation and product offering enhancements. As you can see, all the lines are in an upward trend. As the number of quarters passed increases, the gradient of these lines is also trending upwards. If we have a look at the Wix financials, firstly, on the revenue side, we will notice that the revenues for Wix have not been impacted by COVID. On the contrary, the pandemic has boosted sales, as you can see in the bar chart. This is primarily due to the acceleration in digital transformation as the retailers rushed to list the products available in their brick and mortar businesses on the internet. However, things do appear to have leveled off as the revenue seems to be flat in the last two quarters. Moving to profitability, the cost of revenues has been increasing, which has adversely impacted the gross margins. Based on GAAP earnings, the gross margin was at an average of 74% in 2019, and it has reduced to 62% in 2021. Investors should therefore be mindful that the future gross profit growth could be different and likely lower than the future revenue growth due to the changing revenue mix from different business segments with different gross profit margins. Please consider this in your valuation of the company. The SG&A and the R&D costs are still a bit on the higher side. The SG&A and R&D costs are decreasing slightly. Let's also spend a moment on discussing the revenue retention. The revenue retention is measured through the annual net revenue retention rate. This metric has increased to 113% in 2020, which was helped considerably by compounding growth from online e-commerce users. However, there has been a slowdown in e-commerce, and it might be due to the Delta variant impacting the first waves of website builders coming from hotels, restaurants, and events sectors. Wix is certainly leading the pack when we compare it to its competitors such as WordPress, Shopify, and Squarespace. It is making significant investments in technology and infrastructure, which is driving meaningful performance improvement for Wix. However, Wix is being closely followed by Shopify. There are a couple of areas that can enable Wix to improve its margins and free cash flow. For 2021 Q3, Wix reported an expected future collection of 15.4 billion over the next 10 years. So the existing cohorts are a growing source of future collections. If Wix can execute on these cohorts, Wix can benefit from significant positive cash flow. The second point is on Wix's efficient marketing based on the TROI metric. If necessary, the company can reduce its marketing expenses due to Wix's highly efficient marketing and high retention rates. As we can see, for Q1 21, at a marketing cost of 81 million, Wix collected 60 million in cohorts, giving it a very efficient ratio of 0.7 times. This is another area that Wix can leverage by reducing advertising expenses as a percentage of revenue and improve its net profit margin. If you found this video useful, then I urge you to join our research platform. It's completely free, there are no hidden costs, and that's the place where we publish top quality research covering companies with the capability to compound in the long term. And that's also the place where we publish research discussing key investment concepts. The link is in the description section below. Guys, if you found this video useful, then don't forget to hit the like and subscribe button.